Unveiling Trends, a deep dive into new vehicle registrations. This analysis delves into a comprehensive dataset spanning 24 years, 2000s to 2023, on new vehicle registrations in various categories. The data offers a wealth of insights into the dynamics of the Austrian automotive market. It serves as a window into the choices and preferences of consumers, reflecting not only their economic circumstances, but also their evolving priorities and values. The trends we observe can be attributed to a complex interplay of factors, including economic growth, demographic shifts, technological advancements, environmental concerns, and government policies. By dissecting these trends, we can gain a deeper understanding of the present state of the Austrian automotive market and make informed predictions about its future trajectory. A landscape of vehicle types. The data encompasses 5 distinct vehicle categories: passenger cars, two-wheeled motor vehicles, including motorcycles and scooters, lorries, other motor vehicles like buses, special purpose vehicles and trailers. Passenger cars consistently hold the highest registration numbers, reflecting their prominence in personal transportation. Two-wheeled motor vehicles follow a similar trajectory, albeit with a smaller volume. Lorries exhibit a more stable pattern, suggesting their role in commercial activities. Registrations for other motor vehicles and trailers show a steadier trend with some fluctuations. Passenger car registrations reveal a fascinating story. From 2000s to 2011, the data suggests a period of growth, potentially driven by a confluence of factors. Economic prosperity during this period likely fueled increased consumer spending, making car ownership a more attainable option for many. Additionally, a growing population and a rise in suburban living, where car ownership is often seen as a necessity, could have contributed to the demand for new vehicles. Furthermore, advancements in automotive technology during this time may have enticed consumers with features like improved fuel efficiency, safety innovations, and greater comfort, leading them to upgrade or purchase new cars more frequently. Financial fluctuations can impact consumer spending, leading to a preference for holding onto existing vehicles or opting for more economical options. As fuel prices climb, consumers might be drawn towards smaller, more fuel-efficient vehicles or alternative modes of transportation. Changing demographics and growing environmental concerns might lead to a preference for ride-sharing services, public transportation, or carpooling, reducing the need for individual ownership. Interestingly, 2023 shows a slight uptick in passenger car registrations, which could be a temporary shift or the beginning of a reversal in the downward trend. Further data will be needed to confirm this. For two-wheeled motor vehicles, the pattern generally follows passenger cars, with a similar decline from 2012 onwards. This suggests a potential correlation between the choices made for both vehicle types. Lorries, on the other hand, exhibit a more stable pattern, likely reflecting their role in essential commercial activities, less susceptible to short-term economic fluctuations. Registrations for other motor vehicles and trailers remain relatively stable throughout the timeframe, with some minor variations. A look at 2024. While the data provided only includes the first month of 2024, January, it's worth noting some early indications. Passenger car registrations show a significant drop compared to January 2023. This could be due to several reasons. It's possible that January 2023 was an unusually strong month for passenger car registrations, creating a high baseline for comparison. Alternatively, this decline could be the start of a continuing downward trend. However, it's too early to say for certain without data from the following months. Analyzing trends over a longer period can help identify if this is a temporary fluctuation or an emerging pattern. Factors such as seasonal variations, economic conditions in the early months of 2024, and consumer confidence levels can all influence new vehicle registration rates in a given month. By monitoring these factors and comparing registration data to previous years, we can get a clearer picture of whether this January slump is an isolated event or the beginning of a longer-term trend. Looking at registrations for other vehicle categories in January 2024, we see that they remain within the range observed in recent years. This suggests that the decline in passenger car registrations might be an isolated event, specific to that category, rather than a broader trend affecting the entire vehicle market. If this pattern holds true in the coming months, it would lend credence to the idea that the January dip for passenger cars is a temporary fluctuation and not necessarily indicative of a larger shift in consumer preferences, uncertainties, and future considerations. The future of new vehicle registrations remains shrouded in some uncertainty. Several factors could influence upcoming trends. A strong economy can lead to increased consumer spending on new vehicles, potentially reversing or slowing down the decline observed in passenger cars and two-wheeled motor vehicles. Conversely, economic downturns can trigger a preference for holding onto existing vehicles for longer periods or opting for more budget-friendly options. Technological advancements in electric vehicles and hybrids are making them more affordable, efficient, and practical. This could significantly influence consumer preferences, leading to a shift towards more sustainable transportation choices. Government incentives for EVs and stricter regulations on emissions from traditional gasoline-powered vehicles can further accelerate this shift. Government policies can significantly impact the automotive market. Stringent environmental regulations that aim to reduce carbon emissions can disincentivize the purchase of gas-guzzling vehicles and promote cleaner alternatives. Conversely, government subsidies or tax breaks for EVs and charging infrastructure can make them more attractive to consumers. Additionally, policies that promote carpooling, public transportation, or cycling infrastructure can also influence new vehicle registration rates. Shared mobility. The continued growth of car-sharing and ride-hailing services like Uber and Lyft could further impact new vehicle ownership rates, particularly in urban areas. These services offer consumers greater flexibility and potentially lower costs compared to car ownership. As these services become more widely available and convenient, they could lead to a decrease in the need for individuals to own vehicles, especially for short commutes or occasional errands. The data on new vehicle registrations paints a complex picture of the Austrian automotive market. While passenger cars have historically dominated the landscape, recent years have witnessed a decline. This shift can be attributed to multiple factors, including economic considerations, fuel costs, and changing consumer priorities. The future of vehicle registrations will likely hinge on emerging technologies, economic conditions, and government policies. By closely monitoring these trends, stakeholders in the automotive industry can make informed decisions for the years to come.